Good morning, traders. Happy Sunday. Well into April now. I got a little snow yesterday. That's Utah, man. It could snow one day, 75 the next. It's crazy. Happy Sunday to you, Graylin. Good to see you. Hi, Michael. Good morning, Bob. Good morning, Perry. Love it. The usual suspects. The crew is here. We're still going to wait just a minute. I have to grab my platform anyways. I have to jump back in here. So we'll get that started. See if anybody else is straggling in, missing a few of the crew. How's everybody's weekend going? I hope productive. If not productive, fun. If not fun, I hope relaxing. I hope you have something. Good morning, Perry. Maybe I already said that. I don't know. All right, I'm gonna get started. We'll let them catch up. Things are loading now, so we'll be fine. Welcome everyone officially to the Market Watch group. Oh, it's jumped right over top of me. Oh, that's the wrong one. Ooh, hold on. I hate when I do that, but we did have somebody else joining. Let me get just this other account. I logged into the wrong account. Okay, welcome to the Market Watch group weekly market prep. I'm Scott. Let's get started. Here's the disclaimers. As always, be careful out there. We're not brokers. We're not advisors. This is for illustrative. Oh, let's change this one to live and continue. Sorry. I was enjoying coffee with my wife and I'm like, oh, I forgot to get my account reloaded. That's my bad. So far, so Bob said good weekend. Got a good price on ribeye steaks. Okay, so due to my frustration with the brisket, I smoked a tri-tip yesterday. It was delightful. A delightful tri-tip. I love smoked ribeyes too. Smoke them, reverse sear them in a hot skillet. Oh, amazing. Yep. Had the tri-tip yesterday. My wife makes a delightful chimichurri. Good. Leftovers for today. Okay. Today, what are we doing? We're going to market posture because that's what we do on Sundays. We look at the market. This is the time the chimp is in the cage sleeping. It's nice and quiet. The professor can get to the computer and get some work done. Let's establish the tone. Let's make sure that now when we don't have trades potentially biasing us, well, I mean, we do, but they're not running right now, right? We're going to posture. Then after we posture, then we're going to go look at our trades. I'm assuming that's what you do. That's what I do. When we get done here and we've finished when we've finished our, this is my posture. I don't posture and then come do it with you guys. That's right. This is my posture routine. A lot of this work is the work that I would have normally done on a Sunday, and we do it together. So when I'm done with this, what am I going to do? Well, I've got trades on. I need to go make sure I have a plan for each of those trades. I'm going to put that plan on now before the market so that when the market kicks in, I've got a few what ifs. What if it opens up? Great. That's what I was expecting. Here's what I'll do. What if it opens flat? Okay, no problem. I'm going to wait though. And what if it gaps down? Ooh, that's probably, I need minimum three what ifs for each trade that you have. When you're done on Sunday with your routines, when you start Monday morning, you should have 3 what ifs for every single trade you have on. Period. If that's not been your routine, it starts today. Today's the day where every trade you have, you look at it and you give it a, what am I expecting? What is my what if or correlated to that? What is like, okay, it's just pausing, it's something. What do I not want? And what am I going to do if I see that? When we do that on Sunday and we start Mondays, no matter what happens Monday, you're like, okay, execute. You're not emotional about, what it's down, the futures are down. What should I do? And I know you felt it because I felt that before. Of course, we all have, right? And when we feel like we're getting yanked around by the market, we've got to pull ourselves out of that cycle. And that's part of what this process is supposed to do. So it's not just like we posture. We posture, then what? Then we go and we make sure our watch list is set up according to that posture. And we make sure that our current trades make sense with that posture. And if they don't, we're going to make adjustments quickly come Monday. And that's happened to me before, where I'm like, oh my gosh, right? I'm starting to feel less bullish. And if you looked at my trading, you would be like, no, you're more bullish, right? No, I mean, I've had times when I'm working with someone one-on-one and we get into their their Greeks of their net positions. And I'm like, okay, so you're bullish, bearish, neutral. They're like, I'm feeling a little neutral. And I'm like, your portfolio says otherwise, my friend. Right? There's full of bullish deltas. And so once we have our posture, we go make sure that our portfolio aligns, that what we're in and what we're looking for aligns to the posture. I'm still bullish. What am I looking for? I'm still looking for bullish trades. I might be looking for bullish trades that are more theta positive. Markets kind of turned into this little sideways grind. We have a little bit more implied volatility. Okay, make an adjustment. That's what we're here to do, is to see exactly what this market is. Be water, my friends. That is specific advice. If you're water, what do you need to know? What am I fitting into? Is it a cup? Is it a pot? Is it a bottle? What are we doing? Market, tell us, what are we doing here? That's what we're doing, right? We're listening. So futures are up. I mean, we're bullish. So, okay, we'll look at the economic calendar. What do we have this week? We already had a preview. In a word, inflation. We'll make it 2 words. Inflation data. Okay. We'll see if we need to realign anything. We should probably grab a few materials and a few energy stocks. I'm hoping they got overblown or are going to reverse. But we should probably have a few things in case they bounce one more time. If they bounce one more time, it will start really stressing the market. Some of you have traded some. We haven't done any trades in here. Certainly, right? We've been watching the fact that that's been happening, and I know some of you have traded that. So that might be one thing we need to do, is consider that. I feel like the other sectors, I feel like we have a great list of financials, a great list of industrials. We have a good list of tech and communication services. Communication services is a little harder to find sometimes. We have the core, and then with tech, we've got some software, we've got some chips. So I feel pretty good, but maybe we'll look into that. What's our trading list look like? Is clearly a question. And trading plan section of the week. We're almost done with iteration number 2. If we have 52 weeks and it takes us 8, we should be able to get 6 passes at the trading plan every year, 6 times. 6 times a year. 6 iterations if you do 1 section a week. Even if it's just a half an hour where you spend a little bit of time working on it, that plan, that cadence, you will have an unbelievable if you showed your trading plan to somebody else, they'd be like, oh my gosh, they would feel inadequate as traders when they saw your plan. They'd be like, yep, I know why I'm losing money now, because my plan doesn't look like that. That's what we're trying for here, right? That's what I want. Your trading plan is this beautiful representation of rules, routines, structure, ideology, right? We want all that. That represents you as a trader. That should be your thought, so that you want to work on it, not that you feel like you have to. Let's get into it. Let's go. The #1 public university in the West, Wall Street Journal 2023. Look at that beautiful campus. That is the alma mater of Scott Beck, University of Utah. I don't know. I don't know why that's there. But yeah, beautiful campus, right? Yes. Okay. Let's get into the market. I get distracted sometimes by the things Yahoo is trying to pitch me on. I'm like, wait, can't sell somebody who's already sold, my friends. I'm done there. I need to detach my charts. There we go. Now we have them. Let's get started. Okay, here we are, April 7th. Hi, Stephen. Good to see you. Early. No, 9 a.m. 9 a.m. 9 a.m. for me, 11 a.m. Eastern. Okay. You're thinking Mondays and Wednesdays at 9:15. We go for the full hour, so we need an extra 15 for this beautiful routine of ours. All right. First and foremost, what are we doing? Let's get through these. All right. We'll start with the SPY for the first three. We're coming in at a 675. Not going to be surprised to see it decline based on last week's market. Okay, weekly. It looks like we're starting to veer a little. Now remember, veering outside of this doesn't mean anything. This is just our short-term trend being displayed. I always find it interesting. Sometimes it used to confuse me, but then I started to realize, you know what? I actually love it. So I have the short-term trend that shows up tight like that on the long-term chart. And then I have the long-term chart that shows up on as lines that can be support and resistance lines on the short term. So I like it. It looks like it's turning red. So people are like, oh, so do you start to drop your score? No, we score trend. We score trend. We don't score momentum. So right now, whatever trend we have is we're looking for it to hold. This red one is where we got the 2 from. No, what are we? 175? 1.5? I completely forgot what we are. We're a 1.5. 1.5. Why 2 long term? Because I broke out of this one into this one. So I like to keep them around just in case. If when I felt like that was pretty well established. So I want to just kind of leave those perspectives as much, because here's the thing about trend lines. As much as we draw them just to understand direction, at any given time, they're potentially shifting. They're potentially getting stronger or weaker, but staying positive. They're potentially breaking and reverse. I mean, anything could be happening. And so I'm okay to be somewhat fluid with it. This is almost like, here's how I would describe this for you. Think about the concept of Fibonacci numbers. If you draw Fibonacci, people are like, they think they're magic. Oh, they're magic. It touches them. Well, you're drawing 6 lines for a potential retracement. So yeah, there's a pretty good chance it's going to catch one of those 6 lines. This is kind of the same thing where I've got with these lines, I have here, then here, then here, then here. Look at that cadence I have of like potential. If it breaks, then this, and it just sort of gives me reference points from my own space, because you guys, I may have lines drawn differently than I do. You might be, because you can't just replicate my lines. You got to go draw yours. And you might be like, whoa, Scott, I actually think you should connect these 2 dots. Great. That's what you should do. You shouldn't try to change your thought process to meet my lines. You should draw your lines and then say, here's what that means to me, because we all trade what we see. You don't trade what I see. You trade what you see. So when you draw your lines, you might catch a little something different. That's why when we go through, someone might be a half a point ahead of me, quarter point below me. Great. We want that. That's helpful. That helps us establish as a group. We kind of find ourselves creating almost an aggregate composite of like, oh, okay, this is, I should do something like that. That would be interesting. What if I created, okay, my ADD is like raging on me apparently right now, but what if I created, the hard part would be someone could come in and just like mess it up, but I could create like a Google spreadsheet that, you give access, and you could come in and update your scores. And so everybody's updating their scores and it gives us a composite. Like this is the composite. I actually don't think it would be hugely differential, but anyways, I don't think it would work. As I start playing with it in my mind, it would be hard to maintain. Maybe one day we try that. It would be interesting. And then we turn it into a technical indicator and then we sell it. No, I'm just kidding. Okay. Uh what's next? The score stays the same. That's what I'm saying. We don't score that this might pull back. If this pulls back, my drawing tools. If this pulls back to here and turns, and we said, wow, like is this our trend? I mean, that's the strongest set of lines yet right there, right? So that pullback and turning to make a higher low, that's strength in trend. We don't want to score this like, oh, it's going down, so now it's negative and now it's positive. Then you're just reacting to that. That's not what we're doing here. We're scoring trend. Michael's at a 175. I'm at a 1.5. I think it's a good score. I think it's strong. I think arguing for a 175 is an easy argument. Look at the strength that there's been. If somebody came and said, Scott, I'm a 0.5, I'd be like, okay, how? Like, I'm not here to change somebody's, perspective necessarily, but how, right? If you understand the objective, what you're scoring, you can't empirically see that and be like, because then draw me what a 1.5 looks like, right? Draw me what a minus. So as much as this is objective, or excuse me, subjective, it's each of our opinions. There has to be an empirical approach where you're maintaining objectivity of the purpose here, of what it is that you're analyzing. Anyways, okay, I think we're all on the same page. But I do like these discussions. I think these are the right discussions hopefully to give you confidence in your posture. I know there's times where you might be like, whoa, I scored it this way and Scott scored it that way, and you might feel wrong. And it's like, no, you absolutely could be in front of a move. I've seen it happen. Like, I'm not like, oh, you look, I'm just I score it as I see it. I've talked about times where I'm like, I know that I get biased. Like sometimes things jump a little bit. I'm always reflective to try to figure out, what did I do? What did I let? Because a bias is something that you didn't mean to do, obviously. So then when you recognize it, you go back and try to learn from it and say, no, okay, how do I do better going forward? Does my posture go back to July 22? No. I probably have one that I could. Okay. 6 months. Now this one's a little harder. I think we definitely, you can see that we failed to get this. Where were we? 1, 2, 3, 4, 5. So this is where we started the week. When we started that week, we had just gotten right back up under our prior trend. We were sitting right on it. So the thought process was, if a bullish week came, boop, 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 it's back inside of that that short-term trend. Right? Let me zoom in one click and let me draw what I'm talking about here. Let's give myself a little bit more room. Okay, so this right here, that's where we started. That was last Sunday. And we said, look, we've regained, we're right underneath this trend. If from here we got bullish days 3 in a row, we would have been up in this, halfway up this again. So there was no way we could start scoring it down when it was sitting right there at that same point that we had been scoring. That's why I didn't change my score. But it didn't. It now failed to get a higher high. So we had a same high. But we also haven't gotten a lower low yet. However, I am going to drop it because of its inability. Like I have to, could it still from this point bounce? Yes. But I can't keep holding for this trend when we clearly have moved outside of it now. I don't have a lower low. I don't have a higher high. I'm just kind of like in this range. I'm dropping mine, 1/4 of a point. Anybody else? It just can't. So I'm dropping back to a 175. I don't think it needs to be more than that. I don't want to be like, oh, it hasn't. This thing, could we from right here catch a bullish week and actually even bullish 3 weeks? Yeah. Yes, and that actually is a tendency, right? More frequently than not, this is the end of the month out here. Could we rally through this and get right back up into this prior trend? Yes, easily. Easily with this market that we have. So once again, if you're bullish or whatever direction you are, you should remain until proven otherwise. Yeah, only showing, yes, let me back out of that here. So if it hits back up into this range, could it continue on up? Absolutely. Right? We could easily catch one of these 3-week periods right here. Where it went 470 to, that was 30 something points. 30 point, it puts us up here at 550. 550 by the end of the month. That's a great move. Absolutely. Okay. So not bad. I think volume's going to get hit as well. The question is by how much. Okay, so here is volume. What do we have here? Let's start with the selling days. That's a selling day on volume. That's a selling day on volume. No. Yes. Now, this is one where easily we can differ, right? Because I'm going to mark this a tie. It wasn't enough for me. It only dropped from here to here. Remember, that's the day. It went from that close to that close. It actually gapped up a little bit to start the day. And then the sellers pushed it way down, and then the buyers pushed it back up. So I can't look at that day and be like, that was a huge selling day, because it only dropped a little teeny bit. The next day, definitely. The next day, the buyers did win. But how long did it last? Not long at all. Not long at all, because the very next day, what happened? The very next day, I'm going to give it this. And this is a tough one. Why? Because people are like, you can't give a buyers, it's a red day. It's a red day, but it's an up day. It went from here to here. Right? We didn't give this one because it was too little, but that one actually is pretty good size where the buyers gapped it up. They tried to push it higher. They didn't hold it, but they held most of it. And so that one I score for the buyers. Now, make an argument along the way if you think I'm wrong, but I'm just talking through what I see. Remember, I'm only scoring the above average days. So like the next one I'm going to score is right here. The rest of those I'm ignoring. Actually, you know what? I missed one. Or did I not? What was this one here? 68 million. Oh, we have to do a calculator. Okay, so on this day, where was it? Here. We had 73,114,439 divided by 68,808,940. It counts 5%. That's all I need. That was 6. 5%, 6. So I am going to score it for the buyers. All right. Okay. What else? The next one, again, I'm going to score it with a question mark, which means tie. It's a tie. Didn't do anything. It went from here to here. Oh, a little lower than that. Here to here. So again, you can see that these two are kind of the same in that regard. It didn't move enough. I would do the same for a buying day. If the buying day didn't move enough, I'm not going to score it either. I'm going to give it a question mark, which means I'm not scoring that. So then we have what else do we have? We have a buyer's day here. We have a tie day next, right? The next day it tested higher, pulled back, big volume. Nobody gets it. Nobody gets that. Then there's nothing, sellers. Okay. Are you close? Do you agree? Do you disagree? So I have 3 that I threw out. So how many do we have? We have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. We threw out 3 of them. I've got 3 for buyers, 3 for sellers. Tie goes to the buyers. That should be scored as a 0.25. Barely, but still for the buyers. Now, let's give this a sanity check. Stephen disagrees. Okay, fair enough. Stephen disagrees. Let's give it a sanity check. Where did we start the week? We started the week right here. Where did we end the week? We ended the week right here, this period, not week, it's a month. Started here, ended there. Okay, so if you give this a sanity check, what scores make sense? Well, it's slightly higher. So I think a 0.25 does make sense. It's only slightly higher. So if you said, I got it a 0, okay, I could see that. If you have it at a 0.5, I'd be like, oh, I don't know if I see the buyers with that much strength. So, be careful what you see there. Anything above that, obviously, I mean, come on, 0.75, 1, of course not. Negative. It's positive in price. It's very hard. When I give it a sanity check, what I'm looking for is, did I score it positively even though it had dropped? So if it was down here, I'd be like, how am I positive when we actually have meandered down? Does that make sense? So for me, the sanity check makes clicks everything into place. Stephen disagrees. Where are you? Or if you're not with me on where are you if you're not a 0.25? Let me know. Let me know. Clear it. Let's drop back out. You're a minus. Okay. So what I would say is be careful. The price action was higher, and yet you scored it in favor of sellers. Remember that sellers typically have an easier time. So if I score something in favor of sellers, I would typically expect it's in a negative position. That's where I want you to just kind of look at it. Where did you get there from? I'm not saying change it, but I'm saying if next week we're still at or above where we were, does that score need an adjustment? And volume is one where you've seen me have to make an adjustment because I feel like I got it. I missed it. And I'm not saying I think I have it now. I'm always open, right? Okay. Let's pop back out. Here we go. Let's go see some. Let's go see major market. Okay. Pretty standard. We have the NASDAQ leading. We have the S&P or excuse me, S&P in the second position, and then we have kind of a back and forth in the lag between the Dow and the Russell, depending on the time frame. Okay, that's been the story that we've been evaluating. We're always open to if and when that story changes, but it hasn't yet. Here we see a little bit of that interplay. We're now catching at 133, we're catching just the tail end of the fall correction. And now from this bottom, what's going on? Well, from this bottom and just the tail end, the Russell has now surpassed the Dow. The Dow is the lag. The S&P or the Russell, the NASDAQ continuing to lead. Very bullish. This is what we'd expect bullishly. For us to have our strongest bullish score, we would need the Russell in a leading position with the NASDAQ. Do I need it here? Not necessarily. I would definitely need it here. And you can see we don't have it here. Here we have just a little bit of a, it's interesting that the Dow and the Russell have ended up in almost an identical place, but they've taken such very different journeys to get there. Nice, slow, steady, meandering. This thing's all over the place. Boom, 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 boom. And here they are at the same place. The NASDAQ still leading barely, S&P just behind. So it's kind of interesting. It's bullish. Is it like, wow, this is the strongest thing we can see bullish? No. What are you here? 0.75, I think, is what we've been for quite some time. This thing just really has, yeah. I mean, that's been right. I don't really see much that I think needs to change here. It doesn't look stronger, it doesn't look weaker. Here, what do we have? Here we have the S&P in the lead, which is interesting. Sorry, Stephen, you're talking about your score as a minus 0.25 on the volume, or you're saying you lowered your score to a minus 0.25 on the major market? You're a negative on the major market. Oh, you dropped it. You lowered your score 1/4 of a point. Sorry. I thought you meant you had a negative score. I was like, wait a second. Oh, you scared me. Okay. Yes. I'm going to leave mine. I don't see enough here. And you can see that, it's just kind of a mix. I don't feel like I needed to coming from the 66. I can see why you would consider it. I don't think there's an argument. If you're a 0.5, you're still bullish. You're a little concerned. I don't see enough yet because the NASDAQ's so clearly leading everything. The Russell's been fine. Just love it. Conservative nature. That makes sense. That makes perfect sense. That's exactly how it should go. All right. So I'm going to leave mine the same. Anybody else disagree with that? Is anyone outside of that 0.5, 0.75 range? Here is what? This is sector rotation. Sector rotation shows communication services. Look at that. Looks so strong. Google and Meta, love it. Who else? Financials, love financials. Who's next? Dun, dun, dun. Energy, come on. Look at that. Look at that rally. We've been talking about it for a while. We haven't traded. It really hasn't given a lot because it just keeps on like a freight train. If you rode it, you got some, and then you got out, and then you watched it go higher and higher, and you're like, dang. Obviously some geopolitical events that are exacerbating this, that hopefully are overblown and stabilized. Yeah, seeing this show this strong on the 200. If you look back here, I want you to look what happened, okay? Right around July, oil shot to the top of this list. Now back here, we were still like, hey, we're bullish. Look how bullish we all are. The bulls, the bull club. And that's kind of what we have here. But if this thing shoots on up, remember I've said to you, the VIX is certainly my primary tsunami indicator. What else? Sector rotation, major market, right? I mean, obviously, if you see things breaking out with volume, you're like, oh, that's not good. But what I'm saying is when you're looking for like that's just you got hit by a wave out of nowhere, just like a phantom wave. The tsunami indicator, why do I call it that? Because a tsunami doesn't just like come out of nowhere. There's an earthquake off in the ocean somewhere. All of a sudden, the water pulls back, and it's like you're like, whoa, is it low tide? The animal, there's like no the animals all flee. They're like, yeah, they know something's happening. They sense it. Shit's going down. Watch out. So, and then what? And then this big wall of water comes. So it's like, it's like this eerie calm. Everything seems okay. That's where we are, right? Everything seems okay. I love April historically. Does that mean it's always going to be? No. Are we bullish that we should be thinking about it? Yes. But is there always the need for us to be on guard, to have the readiness to implement plans where you're like, oh, this is not what we wanted to see? Yeah. So what I want to highly, highly, highly demonstrate is the correlation that this has with this. And the big piece that we're watching for is this line, this energy line breaking out above, because when that broke out, and you can see it's not until it sort of topped out and then started to decline. And when that happened, boom, we got to early November and the door opened. So it's like that there's a threshold. It can sustain some of it, but it can't continue to sustain it. So whatever else is going on, if energy sort of puts itself into a superseding position, we have to acknowledge it, right? Period. And that will have a detrimental impact. We've already scored sector rotation down, and we're watching for that. And I don't think it's time to panic yet, but we definitely better keep our eye on it. What do you think? Is that a fair position? Do you think I've overstated it, understated it, or right on point? Let me know if you see it a different way, because we also have materials, and so not as bad yet, right? You can see materials here have come in, but they've turned a little sideways. Okay, let's keep looking. 133. Now at 133, what do we have? Technology on top, but it's definitely stalled. We still have communication services up there. We have financials up there. We have industrials up there. So post correction, that's our big four. And we're pretty stoked about that. We're like, yeah, okay. Here, materials, they've come up, but they're slowing down a little. They're in a settled back. We've already scored this moving out. We didn't like it, right? We gave it a little bit of a comeback, and then here we're like, nope, we dropped our score. So discretionary, we haven't been as inclined to trade that, right? This is how it's influencing us. Not trading things that are in those sectors. Healthcare, same thing. Staples, nothing there yet. Utilities, so there's no defensiveness. Our concern right now is not like, oh, look at this market getting defensive. Our concern is we know how sensitive the market is to interest rates. We know the interest rates are directly tied to inflation, and we know that if energy does what it did in the late summer, it will give us a similar type of a pattern in this summer for a correction, right? So this doesn't look, I mean, this looks fine. If this is all you saw, you'd be like, that looks quite bullish. We have 4 bullish sectors on top. But we don't love this on the 66 day. right? We don't love this on a 66. Let me see if I can actually take us on my Wayback Machine here. Let me see if we go back to what did we say it was? July. Okay, so here, look at this, right? This is back in the summer. You didn't know you could do this, did you? This is amazing. You can go back and you can say, "Hey, Scott said that, we might be able to test it. Go back to a certain time when the market dropped and then go back and watch the 133, the 66 around how it like plays out." But you can see here, what are we looking for here? We're watching energy. Energy was way down low. It was not doing much. And then what happened? Started to move. We're in August. We're like, well, we're still okay. Everything's feeling okay. And then we're getting to the end of August, and what's happening? Technology, communication, discretionary. But here's energy. We're keeping our eye on it because it's starting to come. So let's just kind of watch that for a second. And there it is, just surging. And now we're up here at the top. So by the end of September, you're really starting to see that. Now, let's change this to 66. I'm going to do this real fast. What time is it? Yeah, we're okay. I'm going to go back. June. And then you can see, how does this all play out? Where do we get concerned? And oh, sorry, I went a little too fast right there. Right? Here's where you can kind of see that energy surging. We're early August. When we go back and we look at the full year, and you can see in here early August where that energy was surging and this started to turn over. We're concerned if we see this. So if I were to correlate those same two situations, I would say that right here where we are is right here where this is. Still above the 50, still holding up. So what are we looking for? Well, if this holds, if this would have held back here and turned, well, then we would have still been bullish. And if this holds here and turns, well, then we're still going to be bullish. It's if that doesn't happen, right? Things in motion stay in motion unless acted upon by an outside force. If we see something other than what we're expecting through here, that's when we're concerned. We're not there yet. Not there yet. Okay. Did we finish sectors? I think we did, right? So I feel I don't love energy. This is where we are now. So now we see energy popping to the top, which is on the 66. So I am going to, where are we? So here's the 66. We have energy. We have calm. Industrial still looks fine. Financial still looks fine. But technology, I don't know. This is a tough one. I'm at a 0.5. I actually think I'm going to, I didn't score this down, 0.25. I actually think I'm going to leave my sector alone at a 0.5. I don't think a point, well, I don't know, maybe a point. No, I'm going to leave it. I'm going to leave it at 0.5. If we have one more week of oil strength, even if technology and communications and financials stay strong, then I'll drop it back just to acknowledge the inflationary pressure it's putting on. I'm going to stay 0.5. What do you guys think? Where are we on this one? This one we could be all over. If you said 0.75, I'd be like, yeah, you still see a bullish. Okay. If you said you're a 0.25, I'd be like, yeah, you're starting to feel the weight of energy. Yeah. Okay. Okay. Fair enough. Fair enough. 0.5. I like it. Let's finish with the VIX. I'm probably going to go a few minutes over. I apologize. I hope you don't mind hanging out with me. VIX, we got to drop. It broke. We've got to drop it. The question is how much, right? Last week, that vol came 1, 2, 3. That's it. We were down here. Even on day one, bam, bam, hold, bam, hold. So what did we do? We broke the consolidation, but I typically don't necessarily score that. It was a higher high. So I'm going to definitely take a quarter of a point for that. So let's start there. We'll try that, see what we think. 1.25. That brings us down. I mean, that's a 0.75 drop. Is that enough? Now, at the end of the week, we did hold at 16. So it was a higher high, meaning it took out like this one here because we had scored that previously. So, okay, we take a quarter point. Was it anything else? No, not for me. Not for me. I'm going to take a quarter of a point for taking out a high, but it held at 16, and 16 is still empirically quite a low score. 16 is not. Let's give ourselves just a quick peek at what 16 is. 16. I mean, if you look back in 2021, we didn't even hardly touch 16 on the downside. So yeah, I'm gonna say 1.25 feels pretty representative. Concerned? Do you agree? Bob says yes, he likes it. Anyone else? Same? Love it. Yes. Steven still 1.5. Love it. Okay, no problem. No problem. We're donezo here. Let's pull this out. Keep pulling. I don't know why I want to keep pulling that spreadsheet up. Okay, 6. Very bullish. We know we can drop from this and then pop right back up. We're bullish. I finished at a 6. Anyone want to give me your final? Let's just kind of get a quick little final range. I think I said I thought we would drop about 0.75 this week. Okay, I'm going to fly through the other stuff while you're putting that on. Let's see what else we have going on. So real quickly, the economic calendar, 5.25. Love it. Still bullish. 5.75. Wow, Sandy, I'm more bullish than you. Same. Okay. What do we have? Monday, nothing. We have Austin Goolsbee, my favorite Fed. Goolsbee. Okay, I'm sorry. I got to see what he looks like. Austin Goolsbee. Yeah. Nope, that feels right to me. Austin Goolsbee, Professor Goolsbee, Dr. Goolsbee. I don't know. Anyways, sorry. He looks like a good dude. But he could be an evil villain in a movie. The evil Dr. Goolsbee. Okay, Wednesdays when we have key information coming our way. CPI, right? Consumer Price Index. We want to see inflation coming down. If we see it come down and the Fed, and we think that the Fed is going to be on track to raise in June or July, either one, right? It's when they say, we may not do it in 2024 that the market's like, what the hell did you just say? And that's what spooked us last Thursday, right? So if we get any indication that we can still have a summer cut, June or July, the market will respond. And that would be enough to kick us into our April rally. We want to be poised and ready for it. Yes. Okay. Thursday, we have the other side, PPI, producer side of the index pricing. So we have PPI on Thursday. We have regular stuff, jobless claims. We do have Fed speak. Goolsbee's talking Wednesday, too. Everyone wants to hear Goolsbee speak. They're like, we didn't realize that we had a guy that had the name Goolsbee. Now we all want to hear him speak. But we have a bunch of other Feds speaking, including Goolsbee. He's speaking 3 times. He's in demand. I'll maybe start texting him. I think he's going to put himself in position to take over the Fed from Jer Bear. Fed chairman. Okay. Um, consumer sentiment. Not much else on Friday. Fed watch. What are our expectations? Nothing for May. We know that. Let's go to June. June is he will probably answer. You're right. He looks like the kind of guy who will respond to texts, even if it's just with an emoji. Michael says he's going to give his same spiel every time. Probably right. 1-1 in June. We're now barely at 2-1 for July, but it also, I would say 3-1 because it also has a potential for a second. For those who think it's going to go once in June, they think it might get a second hit in July. So there's still a pretty favorable outlook for summer. I agree, Robert or Bob, if you're saying no way to a second, I agree. If they hit it in June, they won't in July. If they don't in July, we're hoping they will. Excuse me. Sorry, let me start over. If they hit it in June and they drop it a quarter of a point, they will not, in my opinion, hit it a second time in July. They're going to hit it, let it sit, and watch the numbers. If they don't in June, then we're hoping they do in July. So I don't see there's any chance of that 475 to 500 50 basis point cut for me. So but for us to have an April rally, we have to maintain some element of an expectation for a summer cut. If we don't think July at all, the market's going to stall. So we'll see. We will see. Should we look at September? We don't typically go that far. So there's some people who think there'll be 75 basis points by then. That's crazy. Come on. You're the same people who did the same thing earlier in the year. That's just madness. There's still 10% that think no cut. So there is a decent contingency for that. We'll have to keep an eye on that. You can see that has climbed steadily from a 2% to 6 to 9. That's where we are now. Okay. All right, let's hit the watch list real fast. I'm going to fly through it. And we're going to identify those candidates that we think. But the new thing I'm doing is I'm just going to create one weekly watch list. So try to create anything that looks like it could be, that could give a signal. Now, that doesn't mean we're not going to look at the full watch list going forward. But when we we're going to create the weekly watch list. So that's what I'm calling this. An iteration 4-7 weekly watch list. This will be in all of the emails, and this is where any alerts this week will likely come from. Apple, nope. For me, it's got a break. AIG, yes, I would put AIG on my list. I love financials, so anything in there is going to be in consideration. AMD has broke the 50. I'm not interested. Amazon, it's a strong stock. It's just kind of grinding its way out, right? Like you're not really getting a consolidation that would allow us to build an entry. AXP, 100%. Love it. Keep in mind, though, that I'm not going to trade every financial. We're only going to pick one or two. Boeing. So if you were agnostic to Boeing, the company, meaning you didn't care about the crazy expose they had on the Daily Show or the John Oliver Show, whichever it was, and you're like, I don't know about that. It's trying. I mean, it's the buyers pushed it up. If it makes a higher low, could you make an argument for it? Yeah. Am I going to? Absolutely not. But we'll keep watching it. BAC, absolutely yes. On the list. Financials, of course. BLDR, I'm going to say still BLDR is an opportunity. And some of you may have stayed in it. Some of you may have re-entered it. I tried for a flag. It just triggered me a little too early, got out. And now what? Opportunity prevails. Citigroup looks phenomenal. Caterpillar would be one carrying from last week. I would imagine if you're still in it. Looks great. CMG, The options are terrible and it's an expensive stock. So I don't expect wanting to trade this, but it does look tradable from a technical perspective. Capital One, I'm going to say is a yes, of course. What's the consideration with financials? Some of them are closer to earnings than others. COF is not. BAC, not long, right? A week from Tuesday. So you have to be careful with that. Oil, look at it. Just kept going. Our hope is that it's overextended and that it has a correction, and then a lower high, and then it gives a head and shoulders, and that would open us up to have some bullishness again this year. If it continues and holds, it's going to put stress on the market, and we have to recognize that and be prepared. How are we preparing ourselves, you might ask? Well, one of the things we're doing is learning about calendar spreads, which if we maintain a low implied volatility for the summer, even if it goes sideways, will create plenty of opportunity for us to put trades on. So watch Thursday's video from the Options Foundations class. Join us on Tuesday for the application class, and let's learn more about calendar spreads. Magical. Costco, not yet. For me, it's underwater. CrowdStrike, I would say, is still viable, and I would still have it on my list. I still think it's gone mostly sideways. I get that, but if it bounces off the 50, it's possible. Delta, yes, but earnings, right? For me, yes, but be careful with earnings. DHI, I'm going to say the same thing. Yes, not as much earnings, but there's a possibility that they get closer. The Dow looks fine. Ford, I think Ford looks like it's pulling back, potentially setting up for after a breakout, mind you. Fastenal, yes, but be careful for earnings, and that's going to be a common thing that we say here. But be careful for earnings. Look at GE Aerospace. Bam, it broke out. Why did it break out? Because I didn't trade it. You're welcome, anyone who did. Gold. This is part of materials. Gold, steel. If you're British, aluminium. If you're American, aluminum. Any of these material prices, chemicals are probably up. I mean, right? We don't love it. We don't love it. Google, I still like Google, and I think Google's setting up. I think I'm going to differentiate the watch list into sectors too. It's playing with some new things here, right? Communication services, technology, maybe we'll go together. We'll see. HD, no. IBM is still a yes for me. Let's still be willing. It's holding on, still above the 50. Intel's a no. IWM, I'm going to put it on the list as an ETF. I think it's tradable. I think it's trying to hold the 50. Looking to bounce. JP Morgan. JP Morgan is a yes. I did not plan my list well, and I'm running out of room. That's my fault. You don't have to worry about that. JP Morgan looks good, but earnings are coming up soon. Meta is good. I mean, it's been good. Like, I'm hoping that, like Caterpillar, this is one you're carrying because you're already in it. We almost put the alert on here. I didn't do that one. The next day I did a different one anyway. It looks good. I would expect you still to be considering it. Morgan, I'm not going to put Morgan. It's a little bit like hitting the same resistance, getting closer. We have enough already. So I'm not going to put that on the list, but Microsoft is on the list and is a trade. And if you put the trade on, I believe it's profitable right now. The spread, we'll see. Looks good though. Looks ready to go. Would sure be nice for Microsoft to make a move. Netflix looks good. That's bullish. Right? But that would be one I would say that you're already in. But I'm still going to just kind of keep a watch on that. NVIDIA looks close. The rest of the chips, not as strong. But if NVIDIA goes, NVIDIA can walk alone. The car we put an alert on, and I still think it's viable for additional. So the car looks good. BLTR. I'm a no. It's a downward consolidation. QQQ looks fine. SMCI. I think it's viable. I think it's viable. TSM. I don't know. I don't like it. It's Nvidia or nothing for chips for me. Here is waste management. That is where. That is industrials, and that definitely looks good. We'll put that on the list. Walmart, consumer consumer staples. I would consider Walmart. Maybe I'm already in it. XLB. Materials, we would like to see slow down. And it looks like it maybe could be slowing down a little bit. That would be great. Communication services holding up. Energy strong as hell. We don't love that. Financials looks good. Looks like it's ready for a bounce. So does industrials. I like both of those. I think technology is holding up above the 50. Fine with that. Staples has had kind of a pullback, but it does look like it's finding support, which is why I like the possibility of Walmart. Utilities looks okay, but not too defensive. Healthcare is iffy, as is consumer discretionary. So I still think we have a pretty good list. We've got a number of financials, a number of industrials, a few technology and communication services. CrowdStrike, NVIDIA, SMCI, Google, Microsoft, IBM, Meta. We have one consumer staples, Walmart. So our four growth sectors are broadly represented here, in my opinion. And we're ready. We're ready for the week with that list. Questions, comments, or concerns about our watch list? Well, thank you, Stephen. I appreciate that. I will check out and find that email. Thank you for that. Looks good. Okay, I agree. Last thing. We are on section 7. Section 7 is analytics. I think I still actually need to film an analytics video. So you're welcome, Sandy. It's great to see you as always. Love your dedication. Always miss you when you're not here. Analytics. The spreadsheet. Once you have completed the record keeping portion in the trade log, then you have all of these automated analytics. What do you do with that? All kinds of good stuff. All kinds of good stuff. This is where we find patterns and data-driven areas of our trading that we can start to improve, right? So our next session, is there a new version of the spreadsheet? There will be. Yes, there will be. Yes. So that has an extra exit. It has 3 exits instead of just 2. So if you scale out twice only, 1 and 2, you don't need it. If you sell one, and then still have another piece, it would be useful. So I will try to get that. We've been busy with the alerts this week. We have some marketing things that they've looped me in on that take some of the time. So yeah, I will try to get that. Once you're here, you're looking for patterns of information. Are my losses too big? I can find that down in my loss to risk ratio. Is my reward to risk ratio not what I thought it was? So a lot of times people are like, oh yeah, I look for 3 to 1s. If you look for 3 to 1s and your reward to risk is 1.2, that's too big a gap. You need to figure out, why is that wrong? Are you losing more than you expect? Are you not gaining as much as you expect? Purchase date. That should be here. Trade date. Trade date's when you first get in. Exit date, that's for exit number 1. That's for exit number 2. I'm assuming on Steven's spreadsheet, he has the date for exit number 3. And I don't know, Steven, did you add anything over here? I have days in plus days after scale out. You could add another row for a day, third, number of days for third position, right? Because if you hold something if you hold 3 pieces, how long are you holding the third piece for? These are the kinds of information that I feel are useful. How long am I staying in my winning trades? How long am I staying in my losing trades? So you can see, hey, am I cutting my winners too short? Am I right? We're trying to find patterns where we can say, what do I need to do so that my average win increases, my average loss decreases, which absolutely has either one of those will have a positive effect, but both a double effect on my reward to risk. What can I do to be right more often? And all of that has implications on what we're trying to do. So record keeping leads to analytics. Analytics leads to patterns that help us to improve our trading, because that's what we need to move from analytics section 7 to section 8 on our trading plan improvement strategies. Well, what are you going to improve? You can't just throw spaghetti at the wall and hope it fixes something. You got to know exactly what it is you're trying to fix, exactly what it is that you're trying to get better. Are you trying to cut your losses short? Great. Focus on that. That's always something good to focus on. Are you trying to let your winners run better? Great. Figure out strategies and tactics that can help you squeeze as much as possible out of every winning trade. I'm not trying to squeeze as much out of the best trade. I've got to look at my best trades as pawns. I'm never going to get the best trade, because in order to get the best trade, I have to make worse decisions on every other trade that's not the best trade. So I'm willing to sacrifice the best trade in order to also sacrifice all the worst trades. So if I can sacrifice 20 really bad trades by sacrificing the one best trade, I will. I want the meat in the middle, right? That's what we're going for. That's our philosophy here. Throwing spaghetti on the wall works. Well, it helps you know if your spaghetti's done. but, Michael. All right. It's good to see you guys. I told you I would take 10 minutes, and here we are, 9 minutes over, and I'm wrapping up. I appreciate you staying. It's good to see everybody. What do we have this week? The norm. Monday morning, I'll see you at 9:15 a.m. for our market open. We'll see what the futures look like, and are we what of our scenarios for all of our open trades are we likely to see on the open? So today, make sure you have those 3 scenarios. And beyond that, Tuesday is a working session on calendar spreads, and we have our weekly watch list. It's good to see everybody. Enjoy your Sunday. And as always, happy trading.